We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Hey, this is Tom. If you've found value in these interviews over the years, please don't forget to like and subscribe to the channel, especially on YouTube. I don't like to interrupt the show to do this, but it helps our channel to be seen, which has proven to be more and more difficult on certain platforms. Thanks. Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Dave Kranzler from investmentresearchdynamics.com. He's also the author of the Mining Stock Journal and Short Sellers Journal. Dave, thanks for joining me today. How are you?
Tom, thanks for having me on again. It's always a pleasure.
Absolutely. And, there's so much to try and keep up on, so much to talk about. But I want to start today's discussion by asking you, what are the biggest, let's say, risks that you're watching at this time? Are they financial? Are they geopolitical? What is occupying the most amount of your bandwidth right now?
What occupies my bandwidth is trying to ignore the risks that I see so I can sleep at night. That's a good question. And I would say, and I don't know how I would necessarily weight them, but I would say, I think that the federal debt load that the U.S. is carrying and adds to on a daily basis, and kind of directly tied into that is the risk that the dollar just starts to go into free fall at some point. I think that what the U.S. did to Russia in 2021 by seizing their Western held central bank assets, and basically, the U.S.'s belligerent posture for the last several years. And then also, what Trump's doing in terms of how forceful he's imposing these tariffs. I think the rest of the world is starting to lose confidence in the dollar as the reserve currency. And I mean, that's been going on for quite some time. And, the devaluation of the dollar and the slow shift of China's and now most large central banks that have a large amount of treasury holdings, slowly shifting out of those and into other currencies like the euro or the yuan, and also into gold now, because gold's the second largest central bank asset globally after the dollar. And I mean, it's been a long process, and I think it's could start speeding up. We know Russia sold out of its treasuries completely several years ago. And China, I was shocked. I thought I saw a report that said their holdings of treasuries are down to under 800 billion. And they peaked around 1.3 or 1.4 trillion at one point. Mm-hmm. So I think, I think the world is losing confidence in the dollar as the reserve currency. And if that, really, if the rug gets pulled on that, I think it's lights out for our financial system. And then obviously, you got to throw in the geopolitical risk. But that one's really the one where I really don't want to think too deeply about it, because the implications, if we were to go to war directly with Russia, as opposed by proxy in Ukraine or with China, the potential implications of what that could escalate into are just too horrifying for me to contemplate.
Mm-hmm. Well, hopefully cooler heads can prevail there, but we'll get to a lot of the dynamics, especially around, let's say, China and the respect that they want to be treated with, just in regards to the tariffs. We'll get to that, but I wanted to pick back up on something that you said here, and that's this idea of the ever expanding debt by the US at this point. Dave, do you think that DOGE and the government at this point under Trump is actually making meaningful progress in trying to combat this expansion of the deficit every year?
I mean, I haven't seen. I didn't look at the latest Treasury statement. That's released monthly. I don't honestly. I don't know. I don't think he can. And I applaud him for cutting out a lot of the wasteful crap that the Democrats spent a lot of money creating, like that U.S. aid, and that's been around for a long time. But um, and cutting back on some of the fat that's accumulated across the government bureaucracies and agencies. But I think I think he's just going to Chris Powell, the treasurer of GATA, said it the best. He's just gonna chop the public spending part of that and privatize it, because I know one of the first things he did was set up a fund that will support U.S. corporations and their foreign endeavors. And I think I recall that he said he was going to shift some of the money that they're saving from U.S. aid into that. And so instead of throwing money at enlarging government, he's going to shift that money and give it to big businesses, which I don't. So, and I don't think anyone can take a meaningful hatchet to government spending without completely, pulling the rug out from under the economy, it'll get to a point where there's not going to be a choice anyway. And that's where I think the risk of the rest of the world losing confidence and faith in the US dollar, I think that's where that comes into play.
Well, certainly we've seen a lot of dislocation and a lot of lack of confidence or shaking up of a lot of the systems that we have traditionally seen here, in regards to the tariffs, as I kind of alluded to, this idea that China wants to be treated with respect at the negotiating table. You and I were kind of talking before we hit record here today about this idea that really Trump's style is that he's used to being this New York property developer, and maybe he's not used to having somebody as an actual equal at the negotiating table. And I think that's a big wrench thrown in the gears of the way that he's used to operating, which I hope that he understands the nuances of, maybe changing his style in order to be able to suit the actual job of negotiating with the rest of the world, because at this point they do have to negotiate.
Oh, I don't think he's going to change. I think he's so used to conducting his affairs as you described, and it's in direct contrast to the diplomacy that the intact that the Chinese are known for. So I mean, it's a complete clash of personalities and methods of trying to get the person on the other side or the entity on the other side of the table to do what you want them to do. So I don't know. I wanted to circle back really quickly because I just had thought. I mean, the current reports, at least I think I saw the one for February from the Treasury. A lot of that still has the spending that was already baked in the cake from the previous administration. So I don't know if you saw it, but it was based on the latest deficit, the latest monthly deficit, and then year to date. And I think it was through the end of February. The U.S. is on track for a spending deficit north of $2 trillion. So in order to be able to tell whether or not Trump's going to be able to have any meaningful effect on shrinking the spending deficit and slowing down the rate of growth in the debt load, we probably won't have a good read on that until we get later into the year and we start to see the spending that's reflected in what he's doing now.
Well, and I think arguably one of the things that I read recently is that they have a $1 trillion defense budget. First time I think that has ever reached that level, which, goes directly against the idea that we're going to be cutting spending, right?
Yeah, it's almost as large as the annual interest tab right now, and that's another problem. I mean, now the cash cost of interest on the Treasury debt's over $1 trillion annualized, and it just keeps growing. Mm-hmm. But to your point about the defense spending, I mean, to me, that alone shows that his campaign platform of shrinking government spending, it was sound bites, unmeaningful sound bites.
Well, and I think on the other side of that point, I'm not personally saying I disagree with spending more on defense. Certainly, you could make an argument one way or the other on that. I'm not criticizing the actual, let's say, defense spending. However, the idea that he ran on this platform of peace and ending all of the wars right away, first day that he's in office, it seems that we're almost headed for more conflict, not less at this point.
I agree 100%. And I think the Pentagon and the Department of Defense has just become just such a humongous beast and consumer of taxpayer dollars. I don't think any president is going to be able to get in there and whack it down. I mean, I personally fall along the lines of what a libertarian's view on defense, and which means we really shouldn't have these military bases that we're spending money on all over the world. But I mean, that's basically how the U.S. enforces the dollar reserve, right? The dollar is the reserve currency.
So, Dave, with the rest of the world basically recognizing this, at this point, obviously, this is, only a couple months into Trump's second term here. Obviously, that's a small snapshot in the greater scheme of time, how these things play out. But, obviously the rest of the world recognizes that this is an unstable point in time. And if we couple that with their understanding or their projection that the dollar is probably, at very least being used as a weapon against them, never mind what the value of the dollar is going to be. Do you think this time could be looked back as a catalyst for the rest of the world to make new efforts to try to move more away from the dollar?
Oh, no question about it. I mean, I think that's been subtly telegraphed for a few years now, mm-hmm. And it's not like it's going to happen all at once, which is what the gold bugs want. I'm not using that term pejoratively because I call myself a gold bug, mm-hmm. But I mean, if China pulled and I think China alone has the capability of pulling the plug on the dollar. If China wanted to do that, it could, but it also would unstabilize things. So to the extent that I think it would, that in and of itself would start a global war. So I mean, it's something that's been going on gradually over time. Certainly, at one point when this process started, I think the dollars were used for something like 95% of all global trade. And now I think the last number I saw not too long ago, it's something like 65% of global trade. I mean, we know Russia and China have been trading bilaterally in their respective currencies. And I believe, because they got together and chatted about this during Biden's term, I believe China pays for oil from Saudi Arabia in yuan. So and there's a lot of countries now that trade with each other using their own currencies. So and I think that the percentage of dollars that are going to be used in global trade settlement is going to continue to decline, but it happens slowly, and you wouldn't want it to happen right away. It would be too destabilizing.
Right. Well, when we think about the amount of treasuries and U.S. debt that China owns, you brought that up earlier. How do they balance trying to liquidate such a large portfolio of U.S. debt? If they did it all at once, it would obviously crash the appetite for that. But that's still an asset that they hold, so it doesn't serve their interest either. At this point, I wouldn't think to just try to, as you said, like basically sewer the market by oversupplying the market with treasuries, right?
Oh, yeah, no question about it. But like I said, again, it's been a gradual process for them as well. Because I know it wasn't too long ago when they, like I said, I think their holdings peaked around 1.3 or 1.4, but 4 trillion. I used to read the the funds flow statement on a monthly basis. I forget what they call it, but it's put out. I think it's either put out by the Fed or the Treasury, and it shows on a monthly basis which foreigner, a list of the foreigners that own treasuries. So, and I got tired of keeping up on it every month, but
Mm-hmm.
but if what I read, if I recall correctly, if they're under 800 billion, I mean, they've put a pretty big dent in their treasury holdings already, just taking it down from 1.3 trillion to where it is now. And I did notice when I used to watch that report, the TIC report, Treasury International Capital Report. That's what it's called. I used to read it avidly on a monthly basis. I would notice there'd be periods of time when their holdings would decline by a fair amount, and then in subsequent months they'd be net buyers of treasuries. And I think that was also just to kind of help support the price level of treasury bonds and make it look like they're not trying to dump them all at once.
So do you think that these larger moves as well, and when we think about the amount of capital that central banks hold, do you think this also brings into question how central banks hold their gold and their gold reserves in foreign central banks? Does this really bring into question the confidence that foreign central banks have in others storing their gold for them?
Oh, there's no question about that. And like I said, I think foreigners, I think foreign central banks have been slowly getting their gold away from the Fed. That's kept at the Fed for a while. That's another, as we were discussing, before we started recording, that's another piece of information the Fed won't reveal or give up. But I think that process of central bank repatriation of their gold that's held not just at the Fed, but at the Bank of England and several other central banks, I think that process of repatriation accelerated, after the U.S. seized Russia's assets. And now I read reports all the time of countries, buying gold in London and having it shipped back to their own country for safekeeping by their own central bank.
Mm-hmm.
And there was an article, I don't know if you saw it. There was an article, GATA dispatched it about, maybe 3 weeks ago, where it reported that Germany was considering repatriating the rest of the gold that the Fed safekeeps for them. So, I think you're going to start to see that whole process accelerate as well also.
Mm-hmm. Well, and I think that was a perfect example of this idea that maybe the idea that somebody else holding your gold is this counterparty risk, especially with, I think, what was it, 900 tons, something like that, is probably not the greatest idea.
I'll tell you, when I first jumped into this sector back in 2001, there was the site's still around. I think it's called goldeagle.com. And that used to, 321's been around for, since before I started. I'm friends with Peter Spina. and not 321 GoldSeek. The 321's been around longer than I've been involved in the sector. GoldSeek has been, and there's a couple others out there, but Gold Eagle back then would post commentary from what I would consider the hardest of the hardcore hard money analysts. And I remember I read an article maybe like in 2003, and I can't remember who wrote it. And I really wish I had kept it, had bookmarked it. I think it was a guy by the name of Eric DeCarbonneau, who kind of disappeared in the middle part of the first decade of the century. But his writing was fantastic. And I think it was him. And he made the assertion that if you don't hold your gold and silver in your own physical possession, you technically don't own it. And it took me some time of just kind of meditating on that and thinking about it. And then all of a sudden it clicked as to why. Mm-hmm. And that example of Germany trying to repatriate its gold in 2013, half of its gold from the Fed, that's a perfect example of it.
So, Dave, ahead of the tariffs here, we had this huge demand and price spike for gold, huge demand from London to New York, and delivery times went out to like 8 weeks or something like that. And this was, all of the anything everybody could talk about in the gold sector here. That's the only thing that was kind of coming up. Where are we with those deliveries, considering that 8 weeks is still, a couple weeks out from where we are originally from that?
That's a really good question. I mean, certainly information with respect to that the Bank of England was communicating. They've put the kibosh on that. They rolled out that guy, that beat Bank of England governor, who said, "Oh well, we don't have enough. We have more people or more entities that want their gold that we're keeping for them than we have, loading docks and lorries to do it." And that was BS. And Ronan Manley published some historical facts that proved that was BS. It was good. And I was thinking about that just the other day. I was like, we're not hearing anything anymore about the delay to get your gold out of the Bank of England. And I probably should rummage through Ronan Manley's Twitter feed to see if he has any updates on it, because he was on top of that as much as anyone that I follow in social media. And if not, I might DM him and ask him, what's going on with that? How come we haven't heard anything about it? It's a good question. That, again, as we were discussing before we jumped on, recording, one thing that I've noticed for a long time that I've observed is that central banks, the world of central banks and the BIS, try to keep as much actual information about what goes on behind the scenes with the flow of physical gold, between countries, between central banks, et cetera. They try to keep as much of that from public view as possible. And I think they just put out enough to tease us and make us question whether or not what we've been talking about in terms of manipulation and leasing and hypothecation is just conspiracy theory. Because why wouldn't the Fed subject itself to a full-blown audit if it wasn't trying to cover up the truth?
I mean, I guess you could make that argument from both sides, and one of the counterpoints that I thought of when we were having this discussion earlier, I guess we should have hit record earlier, was this idea of not trying to show their hand or give information to foreign entities that might use it against them. But I mean, considering the level of infiltration in the information space in the world today, especially from the East, I don't know that is a reasonable argument anymore. I
mean, you could make that argument, but I think I think, I think the People's Bank of China, I think the Bank of Russia, and certainly all of the Western central banks, the central banks that make up the ECB, I think they probably know what's going on. I think they know the truth. I'm sure the BIS does.
Mhm.
What's interesting, and I don't know if I'm reading too much into this, but I don't know if you've seen the work that GATA publishes by Robert Lamborn. He's like a consultant to GATA, and he tracks the BIS monthly statement of operations as closely, in financial report, as closely as anyone I've ever come across. And he reports the one of the things the BIS is willing to disclose, whether, I don't know if it's the actual numbers or not, but is the level of gold swaps that they do with central banks, with other central banks. So, and the purpose of that is it gives central banks liquidity on the 400 ounce bars. That's the global standard. It gives them liquidity to make deliveries to entities that want delivery of that gold, when there's a shortage of free float. So, and they've significantly reduced the level of the gold swaps. They're like, I mean, it as of the last report, it had come down probably 80% from where I think it peaked in like maybe December or January, right around there. And my theory is the BIS doesn't want to, is reluctant to continue swapping its 400 ounce bars for, bars in kind or whatever it is the central banks use as part of the swap, because they might be worried about getting it back. And certainly that disclosure by the Bank of England, I guess it was in February, certainly that raised the antenna of a lot of other central banks, I'm sure. And a lot of entities that are safekeeping. It's not just central banks that safekeep each other's gold. The sovereign wealth funds, extremely wealthy people, family offices, that type of thing. Any institutions that buy bars. I mean, it's easier to keep it in a central bank. Is just buy it and say it's being kept by a central bank, but you're never really sure. You can't be really sure if it's there. Mm-hmm. Certainly, if I was one of the ones who asked for my gold back from the Bank of England and they said, well, you got to wait 8 weeks. I mean, I'd be pissed. Not only would I be pissed, I'd lose sleep for the next 8 weeks, wondering if I'm going to ever see it.
Mm-hmm. Dave, obviously we've seen the price of gold accelerate quite a bit, being up, I think it was over 30% already this year, versus the price of silver. We've seen the gold to silver ratio get to 110 to 1. How significant and rare is that ratio for the gold to silver ratio?
I actually wrote about that in my latest Mining Stock Journal newsletter. And if you look at a chart that goes back to just 1900, it's only happened a few times. And when it does spike over 100 or into the high 90s, it doesn't stay there very long. So, and I think, well, first of all, we don't have to get into the price suppression element of silver, but I would argue that the effort by the central banks to suppress the price of silver is even more aggressive than the price of gold. It's certainly a smaller market, and a much smaller market than the gold market, the global gold market, and so it makes it easier to suppress it. But it also means, on the flip side, when they lose control, like they did in 2011, the end of 2010, it shoots up very quickly. So it's certainly more volatile than gold. But I think one of the things that's going to happen, because interestingly, we haven't seen much in the way of public participation in the precious metals move, right? I mean, it's right there in front of them. Gold's up, like you said, 30% year to date. And I think it's basically doubled in the last year and so many months. I'd have to look at a chart, but it's amazing to me that the public and retail, they want to chase Nvidia and they want to chase Tesla and overpriced tech stocks. Meanwhile, gold's been the best performing asset since the beginning of 2024. Mm-hmm. And so, that's how the cycle usually goes. It usually takes a while for the public to get in on it, and then what I believe will happen is they'll say, "Oh, I got to buy some gold and silver," and then they'll see that the price of gold is $3,400 and the price of silver is $34, and they're going to say, "The hell with gold! I'm going to buy a lot more silver for my money." And I think that's part of the reason why it's always been called, and I think since Roman times, been called poor man's gold, mm-hmm. because the common person can buy a meaningful amount of it versus just a couple ounces of gold.
Does this also work in favor of countries like, let's say, China, that maybe want to be stockpiling or buying more silver in order to facilitate building out their solar grid, as you brought up earlier as well?
Absolutely. And I don't know if you saw it, but Alistair McLeod posted an analysis on a Substack, and he made a compelling argument that the real entity that's been sitting on the price of silver all these years is China, with the help of J.P. Morgan, so that China can accumulate as much silver as it can at advantageous prices. And I actually remember, I don't know, I want to say, again, don't hold me to this date, but I remember when it was announced, maybe like 2009, 2010, that some of the Western bullion banks, JP Morgan specifically, were putting up precious metals depositories in China. And I'm sure part of that is so that they can trade on the Shanghai Gold Exchange. So, yeah, I mean, I think silver's been in a supply-demand deficit for several years now, right? I think at least 3, according to the Silver Institute numbers. And I think what that's done is what that means in my mind is that more silver has been demanded over the last 3 or 4 years for industrial uses and for investment purposes than is pulled out of the ground. So what you've seen, and you can see it if you go to the LBMA and look at the report that they put out for their silver stock held by LBMA vaults. I mean, there's been a very quick, rapid decline in the amount of silver that's held in LBMA vaults. And I think that's what's been used to bridge the gap between the mine supply of silver and the demand for silver. And at some point, I mean, just that factor alone, I think, is going to start putting a strong bid under the market price of silver. But again, it's silver's been more trading like an industrial metal. I mean, not the last few times the stock market's had a day like today, but up until, I don't know, say a month or 2 ago, when the market was getting hammered, silver was getting hit, but gold was still going higher. Well, now, today, it was up more earlier, but it's still up over 0.5% today. So to me, that tells me that the shift in buying for silver is shifting for industrial use to buying silver for its moneyness. Right. Because it's actually an older form of currency than gold.
Well, certainly there's always this balance between, the industrial use for silver and being used as a monetary metal. And I think it's difficult to try to figure out when that kind of balance does go back and forth. But
it'll be interesting to watch. I mean, obviously China's got a voracious appetite for silver, and when the price of gold shoots up quickly, the Indians shift to silver for a while until they get used to the idea of paying the current price for gold. But it'll be interesting to see if central banks start stockpiling silver as a tier one asset, because central banks used to hold silver, and they've long since sold it and just continued to hold gold. So it will be interesting to see. I mean, if I was running a central bank, I'd start just based on the gold silver ratio alone. I would start buying silver instead of gold. But again, I guess the difficult thing about buying silver is then all of a sudden you need an even larger depository to store the same amount of dollar amount or euro amount of silver as you would gold, right? Mm-hmm.
Dave, when we see, everybody being so bullish on, let's say, gold in this case, you see banks, not central banks, but banks like Bank of America or other banks raising their targets on gold. Do you see that as a time to start to question and try to be cautious rather than, just go full out optimistic on what's happening within the gold industry?
I don't. And there's a couple reasons for that. One is the foreign central banks that are buying gold and taking physical possession of it, having it shipped to the mothership. They don't really care what Goldman Sachs's price target is for gold. Mm-hmm. They just want to buy it and accumulate it as a reserve asset. The Chinese public, which buys a voracious, and the Indian public, they buy a voracious amount of gold and silver every year. They don't care what Goldman Sachs's price target is. I mean, to be honest, I don't even care about Goldman Sachs's price target. I think the factors that have been pushing gold higher haven't gone away. If anything, they're probably intensifying. And the most predominant of which, aside from the voracious amount of physical accumulation, has been, the ongoing devaluation of the dollar. So, and I mean, again, now that it's below 100 and it seems to be holding there, if it keeps going down, especially at this rate, it's gonna send gold to Pluto. So I think, and also I think part of it is, I bet you. So like the banks that I've seen raise their forecast are, as you point out, B of A, Goldman, UBS. I can't remember who else. Those are the ones that stick out the most in my mind. I think they're hearing from their institutional. I think their institutional customers are asking them about gold and want to start buying it. And unfortunately, most of them will buy gold by buying GLD, which to me, it's a derivative of gold. It indexes the price. It's not the same as owning physical gold. So, and I think that's part of it. So raising these price forecasts. I mean, Goldman Sachs doesn't care if their clients make money or lose money. They want the commission, right? That's how they make their money. So, it serves their purpose if they put out, gold could be, and I forget what the latest is, 3,600 by year end is their high end. That could be stimulating a lot of business for them, selling GLD to big accounts. And so I think that's part of it. So, and I also, just from a standpoint of being a skeptic and a cynic, I think some of these banks, I think their bullion departments just don't want to look stupid being left in the dust by having, some of these banks still have gold price targets in the high 2000s. Okay, whatever.
If I came across an article on your new Substack in preparation for today, talking about what you think of Bessent so far and in his role as Treasury Secretary. So what are some of the important points to consider, you think, about Bessent in his performance so far?
A friend of mine that I've known for a long time, and she's an avid precious metals sector investor, sent me a snapshot of a couple paragraphs on the entry on him in Wikipedia. And I know some people think Wikipedia is BS, but there's actually a lot of good information and factual information on there. And I put it in the Substack. What I found interesting, I think he's a chameleon, depending on which party is in power at the time. And so it said, I mean, in 2000, he was a fundraiser for Al Gore. He donated to Hillary Clinton and Barack Obama. In 2016, he donated $1 million to Trump. I'm sure he also donated to Biden. And in 2023 and 24, he donated another $1 million. And then in February of 2024, he had a fundraiser in South Carolina that raised $7 million for Trump. And in April, he had a fundraiser in Palm Beach that raised $50 million for him. So I looked at that and I'm like, this guy just wanted to buy a seat as Secretary of Treasury. And he was presented to us as like a sound money guy with policies probably that sounded closer to being a libertarian. He was promoted as being an owner of gold. Well, we don't know what form that was in, if it was GLD or if it was actual physical gold. And then in July of 2024, Bloomberg Business Week, and this is why I think this part of the Wikipedia, whether it's all accurate or not, I mean, this is sourced from Bloomberg Business Week, where it said he was a key economic advisor to Trump, and he had proposed a 3-point economic plan for Trump modeled on Japan's Shinzo Abe's three-arrow economic policy. Now, I know what their economic policy has been for like the last 30 years. I didn't realize it was referred to as the three-arrow policy. And if you look at what the 3 points of it are, it's designed to devalue the currency to stimulate trade. And it's anything but a sound money policy or responsible, sovereign financial management policy. Now, it would be great for gold if that's the direction that the Trump administration goes in, right? Because this thing it serves to devalue currency to try and make the products your country produces more price competitive. Mm-hmm. So I look at that and I'm like, honestly, what this is telling me, and what some of the other actions that he's done since he's gotten in there, it runs kind of contrary to the portrayal of him when he was selected and appointed to be Treasury Secretary. And he's a hedge fund guy. And this was another part of it that I did include it in my article. He, between 2017 and 2021, he ran one of Soros's hedge funds. In association with Soros alone raises my antenna, right? That, to me, that screams WEF all over it. But he tanked that hedge fund over those 4 years from 5.2 billion to 577 million. So it's like, great, he's become a billionaire by being a hedge fund guy, but how competent is he really? I don't know. Mm-hmm. I'd never even heard of him until he was put forth as Trump's Treasury Secretary nominee.
Mm-hmm. Do you think that this three-arrow plan leads to the possibility of a CBDC in the U.S.?
I don't know about that. I don't know. I know most people would disagree with me on this, but it doesn't seem to me like anyone is moving quickly to shift to a CBDC. I mean, I guess China may be testing one out or something.
Well, Europe, I believe, is headed towards implementing one by October, I believe.
We'll see if it happens. I don't know. That's another one of those things that I just It could be coming and it may happen, but it's one of those things that I don't want to think about because it's one of those things where the implications of it especially for our freedoms are just too horrifying.
Right.
But I'll tell you what, I mean, one of the arrows of the three arrow policy is using your central bank to facilitate market liquidity. Well, and by any other name, that's QE. And I think at some point, the QE is really more of a Fed decision because they're the ones that actually print the currency or create the bank reserves. Mm-hmm. But I mean, the Treasury would be involved in that, and it would be probably be spearheaded by Bessent if it's when it's going to happen. I just don't see how it's not going to happen at some point, given that they're going to need QE to help fund Treasury auctions that are coming. I think it's like what, 9 trillion rolls over this year or something. So, and I think it's going to be hard to find enough foreign buyers to finance that. Mm-hmm. So the Fed will be the buyer of last resort.
Well, as usual, time will tell. But I think having the foresight and the understanding of how this ends up playing or how this could play out is important as well.
Yeah, and again, I think at some point, and I don't know that Powell's going to capitulate to Trump for Trump screaming for the Fed to lower interest rates. I mean, quite frankly, using a real inflation index, not the CPI, inflation's probably running closer to 8 to 9% on an annualized basis, which means real interest rates are still negative. Mm-hmm. So if you take interest rates even lower, real interest rates get more negative. That's inflationary. I mean, it's great. Go ahead, do it. It's great for the price of gold, but that's going to be the result of that policy. And I think the Fed knows that. They know what the real rate of inflation is. They know that real rates are still negative, and I think that's why. What's the range right now? 4 to 4.25, or 4.25 to 4.5, whatever it is. I think that's why it's been a sticking point for them up to this point, because they know it's going to be inflationary if they keep taking rates lower. Even though the economy, 100% agree with Trump, the economy could use it.
Mm-hmm. Yeah, their two mandates are really becoming diametrically opposed for what their decisions end up being.
That's right.
Dave, I wanted to move to talking about the mining sector. The gold and silver miners seem to be responding here, somewhat don't. So how do you see this as a whole? Do you think they're responding as they should? Do you think there's not enough excitement in them yet? Where do you see let's say the gold bull market affecting the actual producers?
That's a great question. And up to this point in this latest bull cycle, which I think you could actually trace it back to, I'd have to look at the chart, late 2022 is when it started. The airplane started lifting off from the runway, and now it seems to have turned into a spaceship. If you look at the most well-run, largest cap producers, and I'll use Agnico Eagle because I think that's the standard for the largest cap global gold producers, and I've thought that for 20 years, but that stock has more than doubled this year over the last 52 weeks. So people who are complaining that the mining stocks aren't keeping up with, and particularly the silver mining stocks are not keeping up with the price of gold, they're not watching stocks like Agnico Eagle. Another one that I think is really well run, and I think they could be an acquisition target, is Goldfields. And that stock has nearly doubled since the beginning of the year. So if you're looking at the right producers, they've had spectacular gains. Where the sector has been lagging is in a lot of the mid cap producers. and for sure the small cap and the junior project development companies. Now, some of the project development companies have had good runs over the last year. I mean, Cabral Gold, which I've been pounding the table on for a long time, that stock has gone from, and I'm talking in US dollar terms here. I mean, that stock's gone from 11 cents in kind of the spring of 2024, and it's ticked up to 28 cents today. So that's a pretty good return, if you ask me. I mean, I know some people would whine about it, but and that, I think it's just getting started. I also think there's a really good chance that its neighbor that's adjacent to it, G Mining Ventures, and it just started up, I don't know, like in the last 6 months, maybe, or last 8 months. They just started up a big gold mine right next to Cabral. And there's thinking out there that they're going to be the natural acquirer of Cabral, because Cabral, it looks like, and again, you can't tell from the amount of drilling that's been done on, you can't tell for sure by the amount of drilling up to this point, but it looks like Cabral, their property hosts a lot more gold, and so far it's been higher grade than the gold on G-Min's property. So, but yeah, and to your point about the miners versus what the price of gold and silver have been doing, what I've noticed since I've been involved in this sector, and there's been really two. You have a secular bull market that started in 2001, and then there was a bull cycle with plenty of ups and downs, but generally gold moved a lot higher between 2001 and late 2011 when it peaked out. I think it peaked out at like 1900 or whatever it was. And then now this cycle actually probably got going in the beginning of 2016 after the 4.5 year bear market in the sector. And again, it's had fits and starts up until, the last 12 to 18 months. But what I've noticed is the way a long-term sustainable bull cycle operates, or the way it unfolds, is that you'll have gold move first, then silver will start to play catch up. The mining stocks, especially, the gold producers, start to get a good bid as gold's moving higher. So then, you'll have like the larger cap stocks follow gold, then silver will start to kick in. And then the last segment of the mining stocks that kicks into gear are the small cap juniors. And that's the way it unfolded from 2001 to 2011. And the juniors, I mean, you'd have some here and there that would give you some great returns over between 2001 and 2008, but they really took off after 2008 and peaked out probably in early 2011. So, and then if you notice in 2016, the juniors, there were some juniors that, were 3 to 5x, baggers. But that move that started in 2016 only lasted till August. And then we went into a couple more years of a kind of a downtrend. And then the same thing happened in 2020. Everyone got bullish on the precious metal sector, and the juniors, launched to the moon. And that rally only lasted from May to August. So it was even shorter. So what it tells me is that when speculative money flows into the stocks quickly, the speculative stocks being the junior project developers, that's not a good sign for the health and sustainability of the current move going on. But what we've seen now since late 2022 or 2023, what we've seen is it's moving, or it's unfolding kind of the way it did between 2001 and 2011, where gold took off. Large cap gold producers started to follow. Silver is finally starting to get some legs under it, and I think there's a lot more to go there. And I think there's still a lot of spectacular gains that can be made with the junior project developers if you pick the right ones. And also some of the smaller cap producers and some of the mid cap producers are quite undervalued relative to their peers. One being, in my opinion, B2 Gold. Another one being, in my opinion, Silvercorp Metals, which right now is still a primary silver producer. Now that's going to change because they're advancing a gold mine down in Ecuador, and it'll come online not too far out, so that'll add gold to their mix. Mm-hmm. Another one that I was pounding the table on was Caliber Mining, and they acquired the Valentine project via, I think it was Marathon Gold that owned it or was advancing it in Newfoundland, and Caliber took it over, and I believe it's scheduled to start producing gold sometime this quarter. And they were wildly undervalued relative to what they had and what they were producing. Part of it was because their largest mine is in Nicaragua, mm-hmm. And I don't think I think they were more leery of investing in Nicaragua than they needed to be, because based on all the research I've done, Nicaragua is an extremely gold mining friendly place to develop mines and produce. But they just got taken over by Equinox Gold. So I still need to do a deep dive on Equinox and decide if it's worth, it's a stock, it's a stock for stock acquisition deal, and decide if it's worth holding on to Equinox Gold. I know, like I mentioned Peter Spina, I know he loves Equinox, and there's a lot of investors out there that love it. I can't make an unbiased, it'd probably be biased coming from me in a lot of people's opinions, but I can't make an investment decision on it until I really do a deep dive. It looks on the surface like it could be a very, very strong, core portfolio holding.
Mm-hmm. Well, you've mentioned, companies being taken over a couple times here. Do we see M&A heating up within the sector? And is that more positive overall as you're talking about the health of this longer term, more sustainable bull cycle?
Sure. Oh, we're already seeing the M&A heating up. Discovery Silver, which is another one that I've known well since its predecessor company, Levon Resources, and they're right at the doorstep of going into construction on a silver mine in Mexico. It's an open pit silver mine with a big underground resource, and that thing is going to be one of the largest silver producing mines in the world. It's going to be just a beast. The holdup on construction is they're waiting to get their environmental permit from the Mexican government, and I think it's going to happen, but it's just taking time because they've filed for it as the administration. Well, even before, I believe, the presidential administration turned over in Mexico. Mm-hmm. So, but they acquired one of Newmont's mining operations up in Canada, and it looks like off the bat it's going to be producing 285,000 ounces of gold annually, and the property itself has a ton of exploration upside. So the stock, the market loved that acquisition because. I've always been recommending Discovery Silver, but when it got down to 50 cents, I was just pounding the table on it in my newsletter, and now it's over $2. But it probably ran, I would say, half of that move, or at least a third of that move, has occurred after they acquired the Newmont gold mine and gold assets up in Canada. Mm-hmm. So we've seen that. There's been some other, there's been the acquisition of Caliber. What's kind of interesting to me, and I think we're going to see more of this as the price of metals continue to go higher, is that up until recently, bigger mining companies would not look at acquiring a project development until it was almost fully de-risked. And by that, I mean it was either fully permitted to construct and operate a mine, or the mine was finished. Mm-hmm. So, another good example of a recent M&A deal is Core Mining taking over Silvercrest Metals. Now, I don't know if you call it dumb luck or well, no, it was a little more than that, because I knew about the property when the predecessor of Silvercrest Mines was acquired by Fortuna, and management was adamant in that transaction that they were going to keep the Las Chispas project. And I told the guy who was the head of investor relations at the time, who I'd become friendly with, I'm like, look, as soon as you guys take that stock public, I want to be your first phone call. And I recommended it in January of 2016 at 16 cents. And it just got taken out for north of $10. But I knew what that asset was, what that project was. And at the time, I hadn't started the mining stock journal. I had my short sellers journal, and I had to get it on public record that I picked it at 16 cents. So I published it in my short sellers journal as a contra dollar play, a way to short the dollar. Buy this silver project development stock. That's all I could think of. Mm-hmm. And then I started the mining stock journal a couple months later. So, but anyway, the point being is they just got acquired by Coeur. Fortuna just bought Gatos Silver miner down in Mexico. But now we're starting to see some acquisitions of junior project development companies where the project isn't quite fully de-risked, which I find interesting. So, big companies looking to add ounces of production or add to their inventory of gold and silver, they're willing to go a little more out on the risk spectrum and risk buying projects that aren't fully de-risked. And I think we'll start to see a lot more of that.
Mm-hmm. Dave, what do you think could go wrong from here for the let's say the mining industry, or those of us that are invested in the miners or looking at them?
Do I have to answer that? To tell you the truth, the way I think that this cycle is going to play out. Well, first of all, I think it's mostly over if the world moves to a gold-backed currency monetary standard, because a big part of the price of gold running up is the anticipation that that's going to happen eventually. Mm-hmm. So, I assume the way they'll do it is central banks will be required to hold a certain percentage of their reserves in gold. Back in the olden days when we had a gold standard, most central banks held something like 40% as reserves. And they'll probably fix the price. Maybe, maybe not. That's how it's been done in the past. And so that kind of means the game is over in terms of price appreciation, or should I say currency devaluation relative to gold. Mm-hmm. As money. And that doesn't mean it's time to sell your mining stocks. I mean, it'll be at a considerably higher level. Mm-hmm. And, these mining companies right now that are producing, they're throwing off profit. The well-run ones are throwing off profit margins that make them look like, big tech companies producing 45, 50% gross or operating margins. And I don't see that it will, that's not going to continue forever. A risk to that could be is if central banks start really printing money before moving to a gold standard, and then you're going to have hyperinflation, and the cost to get the stuff out of the ground is going to soar. So it's going to destroy the margins that we're, the companies are enjoying right now, and that investors get the benefit from. But I think we're a long ways off from that. Mm-hmm. I still think there's a much bigger move coming in gold. Obviously, I'm not unique in that, and a much bigger move coming in silver. And I think we'll still see this cycle play out where the real gains that can be made is in the junior sector, and that's yet to come. That's still on the come. Even though there have been a handful of juniors that have made really good moves, Discovery Silver being one, Caliber Gold being another.
Mm-hmm. Yeah, it just seems like it is. I mean, you can look at it one of two ways. You can look at it as we have maybe the gold price has gotten a little bit ahead of itself, and you could be almost a little bit bearish based on that just being overbought at this point. But when you look at the grander scheme of the debt load, the shifting back or closer to a multipolar world, all of these different things, I think there are a lot of positives for this sector yet.
Yeah, I mean, and there's different ways to measure overbought. I mean, again, retail's been radio silent in participating in this. And I had a subscriber email me and ask me about that. Is gold overbought? Should I take some profits here? I'm like, I don't know what it means for gold to be overbought because of the price suppression for so many years. I mean, it's been underbought for a long time. So why can't it be, if you're going to use the RSI or the MACD, if it's overbought now, why can't it stay overbought for a long time? Certainly the tech sector did. Mm-hmm. For, a handful of years, the tech sector's been overbought. Yeah, there's going to be some volatility in the price, but I still think the general trend is higher because the factors, the fundamental factors that are driving this, they haven't changed any. Mm-hmm. Still got, largely negative real interest rates. Not necessarily, I don't think China's are negative, and Russia doesn't have negative interest rates, but certainly the West. You still have that. You still have central banks pumping liquidity into the system. I mean, quietly, the Fed has pumped up M2 since the beginning of 2024 to close to an all-time high. And no one's talking about that. Mm-hmm. And then the Fed also has other off-balance sheet gimmicks that it uses to pump liquidity into the banking system. So that's a big factor, the currency devaluation factor, and that's not going away anytime soon, as far as I can tell. Mm-hmm. So yeah, I mean, I mean, you can take profits here if you want, but if you're wrong, you're going to end up chasing it again. And I've made that mistake in the past. So, I mean, I trade around gold futures, on a short-term basis to try and take advantage of moves, but not with my physical holdings.
Right. Well, and with the premium associated with that, that's not an effective or efficient way to make those trades.
Exactly.
Mm-hmm. Well, Dave, I think that's a good place to kind of wrap up for today. Is there anything that you'd like to leave our listeners to think about before we do?
One more stock I wanted to mention, because I've been in public with this before. When I have new ideas, I like to keep it embargoed for my subscribers for a while. But I've been public about this, is Heliostar Metals. Mm-hmm. And what they're doing down in Mexico is just phenomenal. They now have two small producing mines that they acquired, and it looks like one of them, and they're drilling the crap out of it right now. It looks like one of them is going to be significantly larger in terms of the overall size of the resource than anyone thought when they acquired it. And in the meantime, they're going to use, right now they're making those two mines more efficient, and they're waiting for a couple permits to mine certain sections of each mine. Mm-hmm. And that'll help their production output. But they'll take the free cash flow that they generate from that and use it to advance their larger Ana Paula project. And that project looks like it's potentially a home run. And I mean, Heliostar was at, I want to say 20 cents in the last year, and now it's mid 80 cents. and it's still extremely undervalued versus what it has. So that's another one to take a look at that I'll throw out there. And I mean, I added more to my position when it was below 80 cents, and I'm getting ready to add a little more now. I want to see a little more news flow out of it, but I'm getting ready to add more there. I mean, in terms of just a parting message, I would say make sure that before you invest in this sector, make sure you do some of your own due diligence and just don't take it from newsletter writers like me or whatever. And I certainly wouldn't follow Wall Street's research in the mining stock sector. And the other thing is, I mean, I hate to be doom and gloom, but I don't have a lot of hope that things are going forward, that things are going to get any better. I think they're going to get worse in terms of the economy, the political environment, geopolitical risks. And the way I try to handle that is it's just kind of like, look, there's nothing I can do about it. I'm just going to go about my business and try to enjoy things as much as I can while I still can. So that would be my parting advice.
Well, Dave, I appreciate that. And I appreciate you walking us through how you see the markets and the geopolitical situation at this point as well. Of course, all your stuff is available at investmentresearchdynamics.com. Excellent Twitter follow as well at INDRES Dynamics. And of course, your new Substack, miningstockjournal.substack.com. Dave, thanks so much for your time today. Always appreciate chatting with you.
Likewise, Tom. Thanks for having me on. Good chatting with you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.